From our Stars and Dogs segment, it's time for this week's Star.
Okay, so China Jo-Jo Drugstores Inc, CJJD on the NASDAQ, like you said, Ryan, currently trading at a price of $2.08 US and has a market cap of $63 million. So the company is a retailer and distributor of pharmaceutical and other healthcare products, typically found in retail pharmacies in China, and it operates around 129 retail pharmacies. The stock was up around 20% in the last week and up 67% in the past 3 months. What's driving it here? On November 14th, 2019, the company reported its Q2 2019 financial results. So taking a look at these results, this is for Q2 2019, and bear in mind all in US. Revenue increased around 3.5% to $28 million compared to the same quarter last year. EBITDA improved slightly to a loss of $1 million compared to a loss of $1.4 million for the same quarter last year. And fully diluted earnings per share also improved to a loss of 4 cents per share compared to a loss of 6 cents for Q2 2018. Now, the question here is whether the upward share price movement over the past 3 months is justified by these results. Revenue has been slowly increasing over time, and its 12 trailing month sales figure is up around 10% year over year. Despite recent revenue growth, it has been a bumpy ride for the business, and they are still very far from posting consistent profitability or even positive EBITDA. Even if we do look back a couple years to see if the company has made any progress, they're still posting relatively similar profit and EBITDA figures. Looking at the company's balance sheet, they do have a net debt position of around $18.7 million and are quite levered with a debt to equity ratio of 1.67. Considering the company has negative EBITDA, this large debt balance could definitely be a hindrance going forward. I personally do not believe that this large share price increase is alone justified by the company's financials and has further been propelled by the recent outbreak of the coronavirus. We have seen the Chinese markets down in the last few weeks due to the coronavirus scare, but analysts have noted the wider healthcare sector could benefit from higher demand for products and services related to prevention and diagnosis of viral diseases with similar symptoms. So now it must be emphasized that if this is what has been propelling the stock higher, it is completely speculative in nature and certainly not something to justify an investment decision on. So this company is clearly far from meeting our investment criteria as they have mediocre financials and a debt-heavy balance sheet. But given the company's recent share price performance over the past week and month, make it our star of the week.